Hello dear students, welcome back. Today we are going to do question number 4th of question number 5th. Here is the question. Kaushik Corporation has purchased machine for rupees 1,24,000 on 1st April 2012. The carriage and installation expense of this machine was rupees 16,000. The repairing expense of rupees 20,000 was incurred before putting this machine for production. On 1st October 2013, second machine was purchased for rupees 1,36,000. Its installation expense was of rupees 8,000. First machine was sold on 30 September 2014 at 40% loss of book value. So here we have to prepare machine account up to 31st March 2015 and show its accounting effect in the annual accounts of 2012 to 2013. Company provides depreciation on machine at 10% every year under straight line method. So let us see how this will be done. Here first we will find out yearly depreciation of first machine, and we know that under straight line method depreciation will be calculated on cost price of the asset. So here cost price of machine is equal to purchase price plus installation expense plus other expense. So here purchase price is rupees 1,24,000 and installation expense is rupees 16,000 and other expense is rupees 20,000. So here cost price of machine will be 1,60,000. If we add all these, we will get 1,60,000. And now we can find out yearly depreciation as we have found out cost price of machine. So here depreciation rate is 10%. So 10% of 1,60,000 is rupees 16,000. So 16,000 is the yearly depreciation of first machine. Now we will find out. Now let us see depreciation for the second machine. Here cost price of second machine is rupees 1,44,000, that is purchase price plus installation expense. Purchase price of second machine is 1,36,000 and installation expense is rupees 8,000. So 1,36,000 plus 8,000 is equal to 1,44,000, that is cost price of second machine. Now if we calculate yearly depreciation, so here we will get, according to 10%, here we will get 14,400, that is yearly depreciation of second machine. But here for the second machine, we will not charge depreciation for full year because here we have purchased second machine on 1st October 2013 and here this year begins from 1st April 2013 and ends on 31st March 2014. And here in this year, we have purchased second machine on 1st October 2013. That means in this year, we have utilized this machine for 6 months only. That is from 1st October 2013 to 31st March 2014. So that comes to 6 months. So here depreciation will be charged for 6 months only. So here 6 months depreciation would be rupees 7,200. That is, if yearly depreciation is 14,400 and if we calculate 6 month depreciation, so 14,400 will be multiplied by 6 months upon 12. So that comes to 7,200. Now let us see selling price of first machine. Here it is given in the question that first machine was sold on 30 September 2014 at 40% loss of book value. And this machine was purchased on 1st April 2012. So in the first accounting year that begins from 1st April 2012 and ends on 31st March 2013, in that accounting year, this machine was with us with whole year. That means we have utilized this machine whole year. So here full year depreciation will be charged, that is 16,000. So 1,60,000, that is cost price of machine, minus depreciation of 2012 and 2013, that comes to 16,000. So if we deduct it, we will get 1,44,000. That is balance of machine account as on 1st April 2013. In the second year also, that begins from 1st April 2013 and ends on 31st March 2014. So in that year also, we have utilized this machine for the whole year. This machine was with us in the second year also. So here also full year depreciation will be charged, and that is rupees 16,000. And if we deduct it, we will get 1,28,000. That is the balance of machine account as on 1st April 2014. And in the third year, that begins from 1st April 2014 and ends on 31st March 2015. In this year, as it is given in the question that the machine was sold on 30 September. So in this year, this machine was not with us for the whole year, as we have sold it on 30 September 2014. So here depreciation will be charged for 6 months only, that is from 1st April 2014 to 30 September 2014. That is 6 months. So here 6 months depreciation will be charged in the third year, that comes to 8,000. And if we will deduct it, we will get 1,20,000. That is book value on 30 September 2014. Now, on 1,20,000, that is book value of machine as on 30 September 2014, we will deduct 40% of it, as this machine was sold at 40% loss of book value, as it is loss. So we will deduct it in order to get selling price. So 40% of 1,20,000 is 48,000. And if we deduct 48,000 from 1,20,000, we will get 72,000. That is selling price of this machine. Now, as we have completed the calculations for depreciation on of both the machines, so now we will prepare machine account. So let's start with the first accounting year, that begins from 1st April 2012 and ends on 31st March 2013. So here in this year, as we have purchased machine at rupees 1,24,000, so here 1,24,000 will be recorded on debit side of machine account, and in particular column we will write to bank account. And installation expenses and other expenses, that is 36,000. So here it will be recorded on debit side, and in particular column we will write to cash account. Date is 1st April 2012. Now at the end of this year, we will provide depreciation for this year. So that comes to 16,000, as we have calculated it earlier. So here, as it reduces the value of machine, so it will be recorded on credit side of machine account. Now we will close this, and here we will get balancing figure. As you can see here, total of debit side is more, that is 1,60,000. It will be written on both the sides, 1,60,000. And by deducting the amount on credit side, that is 16,000. So 1,60,000 minus 16,000, that comes to 1,44,000. That is closing balance of machine in this year, which will be transferred to the next year. That is the very next day of it, that is 1st April 2013. And here we will write to balance brought down. So here 1,44,000 will be returned. Here closing balance of current year will be the opening balance of the next new period. So here 1,44,000 will be returned, and in the particular column we will write to balance brought down. Now in this year, second year, that begins from 1st April 2013 and ends on 31st March 2014, in this year we have purchased another machine at rupees 1,36,000. So here again it will be recorded on debit side of machine account, that is 1,36,000. In particular column we will write to bank account. Then 8,000 is installation expense. It will be recorded in debit side, and here we will write to cash account. Now for the second year, at the end of the second year we will charge depreciation. So here in the second year, first machine was utilized for the whole year, so here whole year depreciation will be charged for the first machine, that is 16,000, and second depreciation for second machine is rupees 7,200. We have just calculated it. So here total amount of depreciation of both the machines, that comes to 23,200. That will be written on credit side. And finally here we will close this account. So here again we can see that total of debit side is more, that is 2,88,000, which will be written on both the sides. And here we will find out balancing figure which is on credit side, which will appear on credit side, that comes to 2,64,800. That is the closing balance at the end of second year, which will be transferred to the next year. So here we will write to balance brought down 2,64,800. That will be called as opening balance in the year 2014 to 2015. So here third year, that begins from 1st April 2014. Here we will write to balance brought down 2,64,800. Now again at the end we will provide depreciation. Here as first machine was sold on 30 September 2014, and here we have calculated depreciation of first machine for 6 months only, as we have sold it in the month of September. So from April to September, that comes to 6 months. We have calculated depreciation, that was rupees 8,000 for the first machine, that we will write. Then on 30 September 2014, we have sold this machine so we will record it on credit side as per real account. We know that machine is a real account. So when we sold it, so here we will record it on credit side of machine account. And in particular column, we will write by bank account, as it is opposite, as it is the name of the account having opposite corresponding effect. So here we will write by bank account. Then as we have sold it at loss, so here we will record it on credit side, that is 48,000, and in particular column we will write by profit and loss account. Then again we will write depreciation for second machine, that is 14,400. Then we will find out closing balance, that comes to 1,22,400. Here total of debit side is more, that is 2,64,800. And if we deduct the amounts on credit side, we will get balancing figure on credit side, that is 1,22,400. That is closing balance of machine. So I hope you would have understood this. That's all for today. Thank you very much.